What did you make of the actual proceeding itself?
Actually, Brian, I thought that was some of the best business news TV I've seen in 25 years. You and I have been covering this for a long time. The Martha Stewart hearings, the Madoff hearings. This was so entertaining for so many reasons. When you have Roaring Kitty on the same hearing as Ken Griffin of Citadel Securities, you know you have something interesting. But what we learned is that our regulators and politicians on this House Financial Services Committee don't really understand how markets work that well. There was so much explaining that needed to happen, and there were so many people that had the wrong perception of what was actually happening between Robinhood, its customers, its market makers, and the short sellers, that it needed a re-education for this entire committee to understand really how markets work if they want to regulate them effectively. We're not going to see much out of this, but calls for investigation and some table pounding, but it was very entertaining.
Oh, okay. Here's a slightly different view. Jimmy, number one. Okay, so what was your take on it? And I agree with Caleb's point that it was entertaining in just sort of a bizarre way. First off, when did pretty much everybody but Ken Griffin is born in the 80s now? I'm starting to feel really, really old. Is there a 40 under 40 for congressional hearings? I have no idea. But I felt in some ways like yesterday was kind of more about social media than the stock market.
Right. In a way, it sort of reminded me of a lot of these tech hearings where you have Congress folks very upset about, different opinions about what's wrong with tech. They moderate too little, they moderate too much. And at the end of the day, no one quite wants to do. I mean, my biggest takeaway from that entire hearing was that a lot of people in Congress should probably be in index funds. They clearly have very little understanding of individual trading, risk. Those look like S&P 500 indexers to me.
Yeah, I mean, Caleb, to that point, and listen, this is a rather, I'm not going to knock Congress for once, I guess, because this is a rather obscure corner of the market. What we're talking about here involves people named, DFV and Roaring Kitty, same guy, by the way, and sort of these odd things, but they're talking about anonymity on the, on message boards, and there was a lot of questions that kind of veered in that direction. Ultimately, whether it's markets or social media, or I'll just call it media because that's what it is now, do you think any new regulation gets done?
Well, what's clear is that we're in the Wild West and that there's so much activity that's going on these online forums. And we've seen in the last month, in the last 6 weeks, how much force day traders en masse can bring to the market and actually affect it. They used to just make some noise around the edges. Now they can actually move markets, move securities, and gather the attention of institutional investors. But what this didn't do yesterday was bring trust back to the markets. We were on a couple of weeks ago talking about a survey we ran that shows that our readers, who are very active investors, trust the stock market less than they do 6 months ago, than they did 6 months ago. Furthermore, they also don't want their brokers telling them when they can and can't trade. So they trust it less, but they don't want that regulation. They don't want to be told, and they don't want the guardrails telling them when they can and can't get in and out of a trade. That's going to be a problem going forward.
Yeah, Jimmy, I felt like also one of the questions, and I don't want to get too wonky, especially at this hour of the morning, a lot of our audience may not know. If we have an analyst on a stock, and we're going to have one on after the break, by the way, we have to get reams of compliance. Do you own this? Does your aunt own this stock? They have, pages and exams, where you can go on a message board and say, buy this, and here's my take. By the way, nothing new. It's been going on for a long time. Do you think there are fiduciary responsibilities to some of the more heavily followed people on the internet?
No, I'm not going to have average people who go on the internet having to start list what stocks they own. That seems like an amazing invasion of their privacy. But I think, listen, people are not idiots. The Wall Street Bets people knew they were taking a big gamble. They were taking it for kind of a strange purpose, and they pretty much got what they paid for. They sent these stocks on a wild ride. They caused a big fuss in the markets. People were aware of that. And I think that you're aware if someone's just on a message board talking about a stock, they may own that stock. Listen, I understand Congress gets very upset at things like this, but people are not idiots. We have human agency. That's a good think tank phrase. They knew what they were getting into. Congress may not have understood, but people did. And just because there's a problem, maybe, and just because some people lost money, doesn't mean we need regulations. And I don't think anybody watching the hearing had a lot of confidence that those folks were going to put in good regulations that would help people without also making it harder to be involved in the market.
Shepard Smith here. Thanks for watching CNBC on YouTube.